Hey, it's Nick here, and you're in the Transparent FX Academy. I'm a top author on TradingView, and it's time to make another full market breakdown to see exactly what kind of opportunities we can be looking for on the period that we will be analyzing both from a technical and an order flow perspective. So without further ado, let's jump onto the charts. Okay, so the pair that I want to speak about into this video is GBP JPY, and the reason for which I want to speak about GBP JPY is because the market has just provided exactly the move that we wanted to see from our previous analysis on the pair. So now it's time to make an update and see where we can be looking for the next opportunities for GBP JPY. Now, as usual, I will be keeping the analysis as educational as possible. So first, we will be speaking about this pair from a technical perspective. We will then go and see what we have from an order flow perspective with the commitment of traders, which is what hedge funds are doing in the market. So we will be checking the commitment of traders for the GBP and obviously for the JPY. And by being able to track how the biggest banks and institutions are moving their orders and their money, we will have an advantage over our competition in the market. And by the end of the video, we will be able to understand where we can be looking for the next potential opportunity on GBP JPY and where we have the best probabilities. Now, starting here from the monthly time frame, what we have is a market which has just reached exactly the previous monthly resistance. In fact, from here, the market has provided a nice rejection to the downside, confirming that at this area, we have a very strong supply zone. And currently, the market is testing again the same supply area, from which we can expect the market to provide a rejection to the downside. So on the monthly, we are testing strong supply from which the market has created this move to the downside. And again, we do expect the market to provide a rejection to the downside. Going down on the weekly time frame, what do we have? Now, on the weekly time frame, we have a quite different scenario. In fact, what we can notice here on the weekly is that the market had printed a quite strong high here preceding this move to the downside, but now the market has broken above this high. And as you know, in the market, when you have an area of resistance and the market breaks above that resistance, at that point, the previous resistance is turned support. And the market is currently testing this previous resistance, now to support. And what we can expect is for the market to provide a rejection to the upside, which is in fact exactly what the market is currently doing. The market is rejecting this area to the upside with these 2 wicks. So at the moment on the weekly time frame, the market is quite bullish, rejecting previous weekly resistance, which is now turned support. Going down on the daily time frame, what do we have? Now, on the daily time frame, we had spoken about the GBP JPY quite a few times in the past. I spoke about the GBP JPY after this move to the upside. I made a full breakdown of GBP JPY when the market was here, explaining all the reasons for which from here we expected the market to create the move to the downside. And in fact, that is exactly what the market did. Then I made another breakdown of GBP JPY when the market was here, explaining all the reasons for which from here we wanted to see the market create a move to the upside. And again, that is exactly what the market did. Then we had the creation of this W formation, and when the market was here, I made another breakdown explaining all the reasons for which from here we wanted to see the market create this move to the downside. And again, that is exactly what the market did. And from here, we wanted to see the market create the continuation to the upside, and I made another breakdown explaining all the reasons for which from here we wanted to see this move to the upside. And again, that is exactly what the market did. Then I spoke about GBP JPY with the very last breakdown. Actually, I also spoke about GBP JPY after this M formation here, and I explained all the reasons for which we wanted to see this move to the upside. And again, that is exactly what the market did. Then I made another breakdown after this overextended W formation. This is the very last time that we spoke about GBP JPY, and I explained all the reasons for which from here we wanted to see this move to the downside. And again, that is exactly what the market did. And by the way, I will link all this previous analysis in description. So you find all this previous analysis linked in the description, so you can go and check it out for further reference and more free education. But at the moment, what do we have and how we can be looking for the next opportunity for GJ? Hey, just a quick thing. Make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. Now, at the moment, on the daily time frame, what we have is a market which has just provided a nice M formation. Now, starting from here, we have the moves to the upside, retracement, move back up, and move back down. Now, generally speaking, after an M formation, what you want to see is the market create a move to the upside to complete the pattern at the neckline, which is the previous support, now turn resistance. So also here, on the daily time frame, what we expect is for the market to create a move to the upside. What we can also notice is that in all this impulse to the upside, there is one candle which is not related to the move, which is exactly this red candle here. Now, why is this red candle quite relevant? Because it is a quite strong demanded zone at the moment for this market, since it was previous resistance, which is now turned support here, since the market is now approaching the zone from the upside. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market, on the pound, what we can see is that with the last report, hedge funds have increased their long positions, adding 12.4K long positions, bringing the net positions from the 3.6K that we had here all the way up to 12.9K. So we had a massive increase of the net positioning from 3.6K to 12.9K net positions, bringing the long positions at the 47.9K area and the short positions to 34.9K. So we have a massive amount of longs in comparison to the shorts, with a big increase with the last report. And overall, if we look more at the long term, we went from having minus 19.7K net position, so a negative net positioning with more shorts than longs, 47.2K shorts and 27.4K longs, all the way up to having 12.9K in net positions with 47.9K longs and 34.9K shorts. So the pound is getting quite strong. And if we go and see what we have on the JPY, we can see that we have just reached 50.5K net positions. So we have quite a high amount of net positions with 63.8K longs and 13.3K shorts from an institutional perspective on the JPY, which makes the JPY as well strong. So we have a strong pound, quite strong pound, and a strong JPY as well. So if we are to be looking for a longing opportunity, we have to be extra cautious. So the way in which we will be approaching this with students is, as usual, being reactive and not predictive. What does it mean? Now, the monthly, weekly, and daily timeframes combined with the COT data are the best timeframes when it comes to the directional aspect of the market. However, you cannot just take trades based on the directional aspect. You have to wait for proper confirmations and actually good entry zones that give good risk rewards, minimum 1 to 3. That is what we take. We don't take trades that have less than a 1 to 3 risk reward with students. And the best time frame for confirmations and entries, that is the 4-hour time frame. So what we will be doing with students is monitoring price action during this move to the downside from a 4-hour perspective. And we will be waiting for the market to shift from a 4-hour bearish market as we have right now to a 4-hour bullish market. And only if the market will shift from a 4-hour bearish to a 4-hour bullish market, only at that point, we will be adding GBP, JPY to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and for the market to complete this M formation at the neckline, which is the previous support, now turned resistance. If you made it this far in the video, it would be great if you can smash that like button and comment below. It really does support the channel and support the creation of more free education and analysis for all of you. But this is just the tip of the iceberg. I have a full mentorship program that will teach you exactly the rules of my rule-based strategies and also give you every single day a new market breakdown in which I show you exactly how to apply the strategies with entries, stops, and take profits, as well as answering every question that you have every single day, including the weekends. So it's a very complete program. It will teach you everything that you need to trade the market consistently. So I will see you in it. The link is in the description, or I will see you in the next video.